Welcome to the Golden Wallet's 60 Plus YouTube channel. My promise to you in every single explainer on this channel is exactly this. By the time this lesson ends, you will know exactly what to do next. No confusion, no guessing, no wondering if you've filled something out correctly. Just clear, confident, step-by-step guidance from start to finish. That is what we do here every single day. Today, we're taking on a big one, the Social Security Administration's Form SSA-1 I know, the application for retirement insurance benefits sounds like a massive, daunting bureaucratic hurdle. But honestly, we're going to break the whole thing down right now so you can approach your retirement with absolute confidence.
So, go ahead and settle in. Grab your coffee, have your documents ready, and let's walk through today's lesson together, one step at a time. We're going to completely demystify this application. Look, the decisions you make on this form, they literally dictate your income for the next 20 to 30 years. Getting the sequence right from the jump produces permanently better outcomes than, trying to fix a mistake after that first check arrives. Let's get it right the first time.
Here's our roadmap for today. We'll be looking at preparing for your application, gathering essential documents, navigating the form steps, tackling tricky application questions, and finally, what actually happens after submission.
Part 1. Preparing for your application.
Okay, let's dive right into this, because this concept is absolutely fascinating. It's really the anchor of your entire filing strategy, your full retirement age, or FRA. This is the exact age where you are entitled to 100% of your primary insurance amount with zero reductions. So let's say you were born between 1943 and 1954, your FRA is exactly 66. But if you were born in 1960 or later, it pushes out to 67. And here's why this is a real game changer. If you claim as early as age 62, you take a permanent monthly reduction up to 30%. On the flip side, delaying past your FRA bumps up your benefit by 8% per year all the way up to age 70. This number is your baseline, so find your birth year and lock your FRA into your mind right now.
Now, while your FRA dictates when you get your full amount, this number right here, 40, dictates if you get anything at all. You absolutely must earn at least 40 work quarters, that's roughly 10 years of work history, just to qualify for Social Security retirement benefits. The administration looks at your highest 35 years of earnings to calculate your actual monthly check, but hitting that 40-quarter minimum, that is the absolute gateway. Here's a kind of wild fact. Even if you earned millions of dollars in a single year, if you don't hit that 40-quarter minimum, the gateway to your benefits stays firmly shut.
Moving right along to Part 2, Gathering Essential Documents.
When I was going through this checklist, one thing really stood out to me. A lot of this is pretty straightforward, right? Your social security number, your banking details for direct deposit, your recent W-2s. But pay attention here. While they will happily accept a photocopy of your W-2, they absolutely insist on seeing your original birth certificate, or at least a copy certified by the issuing agency. No photocopies, no notarized copies allowed for birth certificates or proof of citizenship. They'll mail the originals back to you safely, don't worry, but you have to send them the real deal. Also, if you're claiming spousal benefits or maybe you served in the military before 1968, make sure to have those marriage decrees and DD-214 forms handy too.
Oh, and here is a massive tip. You can actually apply up to 4 months before the exact month you want your benefits to kick in. And please, please do not delay filing just because you can't find one specific piece of paper. The Social Security Administration can actually help you track down missing paperwork or verify stuff through the State Bureau of Vital Statistics, totally free of charge. If you put off signing up because you're turning your house upside down looking for a document, you might actually lose out on monthly benefits that are rightfully yours.
Part 3. Navigating the form steps. Let's see how this builds.
So here we are at the starting line. When you land on the Apply for Benefits screen at SSA.gov, you get the option to either start a new application or return to saved application process. You'll just need to create or sign in to your personal My Social Security account using login.gov or ID.me to get going. It's highly secure, and honestly, it generally only takes about 10 to 30 minutes to breeze through if you have those documents from our checklist ready to go.
Now, what's really interesting about this step is that massive 8-digit number right in the center. That is your re-entry number. The very second you start your application, the system generates this for you. Write it down immediately. Take a picture, print the page, whatever you have to do. Because if your internet magically cuts out, or if you just get tired and need a coffee break, this number is your golden ticket. It lets you save your progress and jump right back in later without a single ounce of anxiety.
As you click into the General tab, you're going to hit the Employer Details section. The system will ask about your work from the current year, last year, and the year before that. You'll just sequentially list your employers, working in descending order. So start with your most recent or current employer and work backward. It's just a simple check to make sure your most recent earnings, which, might not be fully recorded in their system quite yet, are completely accounted for when they calculate your benefit.
Part 4. Tricky application questions. Time to translate some of this jargon.
Item 13 on the application dives deep into your marriage history, and it's split into these 3 steps. Now, you might be wondering, why on earth do they care so much about your past? Well, it's all about spousal and survivor benefits. Step 2 is absolutely crucial here. You must declare prior marriages that lasted 10 years or more. If you're currently unmarried, but your previous marriage lasted at least a decade, you might actually be eligible for divorced spousal benefits based on your ex's earning record. And get this, claiming it doesn't impact their benefits at all. So whatever you do, do not skip this section. It's literally a key to unlocking potential hidden income.
Next up is item 22. Here, you are firmly in the driver's seat. You get to select the exact start month for your retirement benefits. And guys, this is a massive decision because it permanently dictates the size of your monthly check. You can ask for benefits to start at the earliest possible month, taking that age-related reduction. You could wait for your full retirement age for no reduction, or you can even pick a specific future date. Choose this month really intentionally based on your cash flow needs, not just whatever the computer defaults to.
Okay, item 23. This is where Social Security intersects with Medicare. If you're within 3 months of turning 65, the form's going to ask if you want to enroll in Medicare Part B, which covers doctor's services. Here is the trick to this one. Part B requires you to pay a monthly premium. If you're still working and you have qualifying group health coverage through your employer, you generally want to select No. That delays your enrollment and saves you from paying unnecessary premiums right now. But, and this is a big but, if you are retiring and losing that employer coverage, you absolutely must enroll. If you don't, you'll get hit with permanent late enrollment penalty fees that increase your healthcare costs for the rest of your life.
Let's talk about everybody's favorite topic, the IRS. Depending on your combined household income, up to 85% of your Social Security benefits could be subject to federal income tax. To get ahead of this, you can submit a form to elect voluntary federal tax withholding. You just choose to have 7, 10, 12, or 22% withheld directly from your monthly checks. Setting this up right on the form prevents you from having to make those annoying quarterly estimated tax payments, and it totally eliminates the risk of a massive, stressful tax surprise next April. Definitely a smart move.
Finally, Part 5. After submission.
And this brilliantly illustrates what the finish line looks like. It's the comprehensive review and sign page. Think of this as your absolute last checkpoint. Take your time here. Read through every single line. Double-check the spelling of your name. Verify those direct deposit routing numbers like your life depends on it, and confirm that benefit start month. Once you are 100% confident every detail is accurate, you just electronically sign and submit the whole shebang.
Okay, take a deep breath. Once you hit submit, the system will immediately pop up a receipt that has your official claim number on it. Save that number. Generally speaking, you can expect a processing time of about 30 days for the Social Security Administration to make their decision. Though, complex cases can take a bit longer. The great thing is you can track your status right inside your My Social Security online account. And if they need anything else from you, don't worry, they will reach out. So, the crucial point is, when do you actually get paid? Well, Social Security pays 1 month in arrears. That simply means your payment for January arrives in February. And the exact day of the month is tied directly to your birth date. Check this out. If you were born between the 1st and the 10th of the month, your money arrives on the 2nd Wednesday. Born between the 11th and 20th, that's the 3rd Wednesday. And from the 21st to the end of the month, the 4th Wednesday. Go ahead and mark it on your calendar right now so you know exactly when that direct deposit is going to land.
Well, look at that. We've covered the preparation, the paperwork, the online portals, those tricky little questions, and the payout timeline. You now have the step-by-step knowledge to confidently submit your application. The only question left is, how will claiming your benefits this year impact your taxes next year?